This is the six sister theory. Okay. Because S&P has already done it, now here's a real big thing here. If you've always heard me refer to a SMT divergence, S&P has already traded down to its respective inefficiency as we're seeing here for NASDAQ. NASDAQ just entered it today. What does that mean to me? I don't see that as an SMT divergence that's bullish. See, some of you are wrestling with that. What's the difference between Six Sister and SMT? And how do I not get fooled by SMT when the Six Sister is being employed? Well, that's experience, number one. Experience is going to dictate that. But the difference between SMT, which is like, for instance, because the NASDAQ did not go lower like the S&P did, normally if I was bullish, that would be something I would be interested in going long on. But what is my bias? It's bearish. So I'm willing to submit to the idea that this is a temporary inability for NASDAQ to deliver on the same context that S&P submitted to earlier. In other words, lower prices are expected. S&P was quick to get to its targets faster. NASDAQ will just do it at a later time. I don't see this as, okay, what's going to go higher? That's S&P bullish divergence. An S&P bullish divergence would be S&P making a lower low, NASDAQ making a higher low, or reverse it. NASDAQ making a lower low and S&P making a higher low. That divergence between relative equal, or what would be not equal, but relative highs and lows, they should agree. If S&P makes a higher high, then NASDAQ should make a higher high. If NASDAQ makes a lower low, S&P should make a lower low. On an interim, short-term intraday basis, I can use that as a confirmation to something I already expect in price. So I use SMT in that regard as one more confluence. I don't need SMT, but I like it to be in certain trades. I'm not demanding SMT to try to call the bottom in the S&P and the NASDAQ yet, because I'm believing that we still have weeks calendar-wise, of lower prices. There's absolutely nothing bullish about equities right now. And more people are going to be interested in selling short, which is why they allow these things to occur in the fall. It's engineered. It's not going down because you are all collectively selling. They want you to sell. Why would the market be engineered to do that? Because they want to accumulate at lower prices, because they run funds. They run funds, they manage funds, and they want to get those stock prices lower so they can buy them up at a discount.